it's Ken again. Today, I'm going to show you that we are starting our Module 2, Financial Statement Analysis, in Week 2 and until the end of Week 3. This module covers 2 chapters in our textbook, Chapter 3 and Chapter 4. I want to combine these 2 chapters together. In this week, your focus is on, we know that Week 2 and Week 3 are all for our exams. For this week, focus on the class notes until slide number 28, which means we will cover the introduction part of financial statements and the balance sheet. In the 3rd week, we are going to continue to the other 2 financial statements, income statement, statement of cash flows, and briefly taxation to finish Chapter 3 and Chapter 4 discussion. And in our class notes, you will see that in balance sheet discussion, we have a balance sheet in the class notes. In the income statement discussion, we have an income statement in the class notes as an example, and the same for the statement of cash flow statements. Just for your convenience, I have already separated the 3 statements in an individual file, and you should be able to find these files on live for your own usage. So now let's talk about Week 2's discussion. Week 2 discussion. Okay. In general, from the class notes, you will see 2 parts. The first one is general introduction about financial statements. For our weekly discussion, I will later ask Rachel to help me to post 2 PDFs online. These are 2 copies of the Wall Street Journal reports on Groupon's IPO problem with SEC. Actually, Groupon's, I don't know if you are still using Groupon. I seldomly use that website now, but it used to be a hot sell in the IPO market in 2011 when it planned for IPO. However, unfortunately, SEC rejected Groupon's prospectus for IPO at the very beginning. The key reason is Groupon does not follow the GAAP rule. So you can read 2 reports. One is about the fact that Groupon eventually had to follow the GAAP rule in the IPO filing, and also a discussion about companies who are not following the GAAP rule. So as a manager, financial manager, or executive, or entrepreneurship, you can see the importance of the standardization of the GAAP rule for financial statements. So that's the first part, brief introduction. Then, secondly, I'm going to focus on the balance sheet. We're going to discuss 2 things in the balance sheet. The first one is the structure of the balance sheet. That's why I pull out slide number 11 from our class notes. And then we're going to briefly talk about balance sheet analysis. For balance sheet, I personally prefer to do a landscape structure. Okay, having assets on one side and having liabilities and shareholders' equity on the other side. The key thing is this side about assets. In my eyes or in my mind is how much we own, what we have. The right hand side is much we owe to investors. So if you still remember the definition of finance, how individuals or corporations are raising capital and using capital. We owe money to liabilities. They are, for the investors, they are the creditors of us. The equity, okay, they are the shareholders. Owners for us, okay? In assets, in general, 2 subcategories. Number 1, current assets. Number 2, long-term assets, such as fixed assets or tangible assets, property, plant, and equipment, or some long-term intangible assets. What's the difference between the current assets and the long-term assets? About timing. Current assets, short-term, should be used or consumed within 1 year, while long-term assets can be used for longer than 1 year. Accordingly, when we have assets, we have current and long-term. Under liabilities, we also have current liabilities. The liabilities we need to pay off within a year versus number 2, long-term liabilities. Inside current assets, in general, we say we have cash or cash equivalent. We have accounts receivables, R. Accounts receivables. We sell our goods and service to distributors. Distributors usually do not pay us off right away. They may last for some time to finish paying our bill. They are the receivables to us. And inventory. Inventories. Okay, these are the 3 major items under the current assets. Why they come from top to bottom? It's all about liquidity. What is liquidity? An asset, how fast it can convert to cash. Of course, the top ones, cash itself is cash. The conversion is just like right away. So the liquidity is from highest liquidity to lowest liquidity in the current assets. In current liabilities, we can have, since we have receivables, we also have bills we should pay to our suppliers. So we have accounts payables. And some short-term debts. Okay, long-term in general, like corporate bonds or long-term debt. Okay, I go with LT for long-term debts. Under equity, in general, we'll think about common shares or common stocks. And sometimes you will see preferred stocks. That's generally the structure of the balance sheet. Okay, with how much we own versus how much we have raised from the capital market, how much we owe to our investors. 2 equations I want to remind you from the balance sheet. Number 1, short-term versus short-term net working capital, which is the difference between the current assets versus minus the current liabilities. Number 2, the balance sheet. Identity. That's why we call it is a balance sheet, because the left side, total assets, equals the total of the right hand side, which is total liabilities plus shareholders' equity. That's the structure of the balance sheet. And then in the analysis part, actually this is more important in my eyes than the structure of the balance sheet, because financial professionals or accountants can give us the form, but more importantly, as a financial manager, we need to be able to find the use the ratios in the statements, like 5 groups for value, profitability, leverage, liquidity, and efficiency, and interpret these numbers. in general, how to interpret your financial ratios. I usually say like you do the interpretation in two ways. Number one, horizontal comparison. Our own, for example, PB ratio versus our key competitors' PB ratio, like Pepsi versus Coke, or our own data PE ratio versus a group of competitors' ratios, like Ford Motor versus GM and Chrysler and Toyota and Volkswagen. Or more generally, we can use our company's own data PE ratio versus the industry's norm. For fund managers or for ETF funds, we can use our own data or our financial ratios versus the market. That's about horizontal comparison. Vertical comparison, we can use our this year's financial ratios versus our past 3 or 5 years data to see if there will be a big change in the data. If there will be a big change in the ratios, we need to find out the reason why. Maybe there will be some positive impacts, or maybe there will be some negative impacts. For each financial statement, okay, with the given financial statements of the Allied Food, okay, at the end of the chapter, at the end of the section discussion, I will have our example with all the values for the company, okay, by given the financial statements ratios in our discussion with the results. So the financial statements with the given ratios, you can also practice on your own. For example, at the end of the balance sheet section, okay, we have the results for all the key ratios we have introduced in our class notes. And in addition to our week 2, I also want to remind you that I will prepare the practice questions for this week and for next week. I'll keep in mind that by the end of each Friday, I will email you the whole file with the answer file. And our exam number 3 will be during the weekend of the 3rd week. Okay, so that's the introduction about week 2's structure in module 2. In key item in week 2 is the balance sheet. And in week 3, we're going to continue to income statement and the statement of cash flows. If you have any questions, please feel free to email me or stop by my office during the office hour sections. Thank you.